Here's something most people never find out until it's too late. You cannot walk into your regular bank, ask for a $30,000 auto loan on a 1969 Chevrolet Camaro, and expect to walk out with a check. Standard auto lending and classic car financing are two completely different worlds, different rules, different lenders, different logic. And if you go into this process blind, you will either get rejected, get gouged on interest, or, worst of all, overpay for the car because you were desperate to close the deal. Today we're fixing that. This is the complete guide to financing a classic car: rates, lenders, credit scores, step-by-step action plan. Everything you need, nothing you don't. Let's start with a little history, because it explains why this market exists the way it does. Specialist classic car lending as a formal industry only really emerged in the 1980s and 1990s, right when the first generation of post-war muscle cars started crossing the $10,000 barrier, and traditional banks had no framework to appraise them. Companies like J.J. Best Bank & Co., founded in 1993, built their entire business model around one insight: a 40-year-old car with a documented history and an enthusiast community behind it is not a depreciating liability. It's a collectible asset, and it needs to be financed like one. Fast forward to 2022 through 2025. The Federal Reserve's aggressive interest rate hikes pushed standard auto loan rates to their highest levels in over a decade. By early 2025, the average interest rate on a used car loan hit 11.87%. That environment made classic car specialist lending, which often offers lower rates than standard used car loans for qualified buyers, more attractive than ever. SoFi. Now, why won't a traditional bank touch your vintage car? Most traditional auto lenders don't offer loans for vehicles over 10 to 20 years old because older cars present challenges in valuation and reliability. A standard bank's loan system is built around a VIN lookup, a Kelley Blue Book value, and a depreciation curve. A 1972 Dodge Challenger doesn't have a KBB value. It has a Hagerty value, an auction market, and a condition grade. Banks aren't set up for that. Specialist lenders are. LendEDU. Broad Arrow Capital, a Hagerty company, provides financing specifically for collector cars, and loan representatives who understand the collector car market, including why a 40-year-old car might cost upwards of $100,000 or much more. Hagerty. Here are your 5 main financing routes and how they stack up. Route 1: Specialist classic car, best rates for qualified buyers, longest terms, lenders who actually understand the asset. Require agreed value insurance, often a 10–30% down payment. Best option for most buyers. Route 2: Credit union loans. Vehicles 20 years or older are considered classic or antique and subject to specialty vehicle rates. Credit unions often beat banks on rates and flexibility. Membership required. Navy Federal Credit Union. Route 3: Personal/unsecured loans. Lightstream offers fixed-rate loans from $5,000 to $100,000 with no fees, for any make, model, or mileage. No appraisal needed, faster approval, but rates are higher and terms shorter. Lightstream. Route 4: Home equity/HELOC. Lowest interest rates available, often 6–8% range. But your home is collateral. Only for buyers with significant home equity and strong risk tolerance. Route 5: Cash buying. Outright is the cheapest way to own a classic car. No interest, no approval, full negotiating power. But it ties up capital that could work harder elsewhere. SoFi. One critical distinction before we move on: agreed value versus actual cash value. Standard auto insurance and most standard auto loans use actual cash value, meaning what the car is worth the moment it's totaled. Classic car financing uses agreed value, a number you and the insurer lock in upfront, based on an appraisal. That distinction is fundamental to how specialist lenders assess your loan. It protects you. It also protects them. Coming up in Part 2, exactly how your credit score affects the rate you'll get, how lenders actually value your car, and a real monthly payment example you can benchmark against your own budget. Your credit score is the single biggest lever you control before you ever contact a lender. Credit score requirements vary by lender, but favorable classic car financing rates generally require a score of 660 or higher, and only borrowers with the best scores will qualify for the lowest rates. So, here's how the tiers typically break down. 760 and above, you're in premium territory. Expect the best available rate from specialist lenders, minimum down payment requirements, and the longest available terms, up to 84 months with some lenders. 759, still strong. You'll qualify with most specialist lenders and credit unions. Rate may be 1-2 percentage points higher than the top tier. 660-699 approved, but the terms tighten. Expect a higher down payment requirement, potentially up to 30% down and fewer lender options. Lend.edu. Below 660, traditional classic car loans become difficult. You're looking at personal loans with higher rates or a cosigner strategy. Now, how does a lender actually decide what your car is worth? This is where classic car lending gets genuinely interesting. Before a specialist lender funds your loan, they'll typically require an independent appraisal, a physical inspection by a certified appraiser who produces a written valuation. That document becomes the basis for your loan-to-value ratio, or LTV, the percentage of the car's appraised value the lender is willing to finance. Most specialist lenders will finance 70–90% of appraised value on clean examples. DCU, for example, requires at least a 10% down payment. JJ Best Bank may require 20–30% on higher value or lower grade vehicles. Lending tree. Before the loan funds, almost every specialist lender will require you to have agreed value insurance in place, a policy that locks in a specific payout amount if the car is totaled or stolen. Without it, no funding. Get this sorted before you're under contract on a car. Let's make this real with a payment example. You're buying a 1969 Ford Mustang Mach 1, appraised at $25,000. You put 20% down, $5,000. You finance $20,000 at 7% APR over 60 months. Monthly payment, approximately $396. Total interest paid over the life of the loan, approximately $3,760. Total cost of the car, $28,760. Now compare that to a personal loan on the same amount, say, 14% APR over 60 months. Monthly payment jumps to $465. Total interest paid, $7,924. The same car costs you over $4,000 more just by choosing the wrong loan type. And the HELOC route. If you have home equity at 7.5% variable, your monthly payment is similar, but your home is on the line if the classic car hobby gets expensive. The hidden costs trap. New classic car buyers consistently underestimate 4 budget items. Classic car insurance runs $400 $200 per year depending on agreed value and usage. Storage, if you don't have a garage, adds $100 $300 per month. First service on a car that sat can run $500 $500. And registration in many states includes a vintage vehicle surcharge. Budget all 4 before you commit to a monthly loan payment. As of 2025 going into 2026, interest rates are showing early signs of softening, but specialist classic car loan rates remain elevated compared to the historic lows of 2020 and 2021. That means preparation matters more than ever. The buyer who walks in pre-approved, with a clean credit file and a targeted budget, will always get a better deal than the buyer who falls in love with a car first and scrambles for financing second. Here are your 7 steps. Step 1. Check and improve your credit score first. Pull your free report at annualcreditreport.com, the only federally mandated free report site. Check for errors. Pay down revolving balances below 30% utilization. Give yourself 60-90 days to improve your score before applying if you're below 700. Every tier jump saves you real money. Step 2. Get pre-approved before you find the car. Contact 2 or 3 lenders, a specialist, JJ Best Bank or Broad Arrow Capital, a credit union, Navy Federal or DCU, and Lightstream for comparison. Getting pre-approval letters gives you a real budget ceiling and serious buyer credibility when negotiating. Step 3. Choose your lender type deliberately. If the car is under $15,000 and you have excellent credit, a Lightstream personal loan may be the simplest path. If it's $20,000, a specialist lender gives you better terms and understands the asset. Credit unions are the dark horse, often excellent rates with less red tape than specialist lenders. Step 4. Get the car independently appraised. Never rely solely on the seller's stated value or a Hagerty estimate alone. Hire a certified appraiser through the American Society of Appraisers or the International Automotive Appraisers Association. Cost: $150–400. Value: priceless. Step 5. Lock in agreed value insurance before the loan funds. Call Hagerty Insurance, Grundy, or American Collectors Insurance. Get a quote and a binder letter ready. Most specialist lenders require agreed value insurance coverage in place before releasing funds. Don't wait until closing day. Hagerty. Step 6. Negotiate the purchase price separately from financing. Never let a seller or dealer blend the two conversations. Agree on the car's price first, then discuss how you're paying. Classic car dealers occasionally offer in-house financing, but specialist lenders who understand the collector car market are almost always a better option than dealer-arranged finance. Lend.edu. Step 7. Read the payoff clause. Ask directly, is there a prepayment penalty? Some lenders charge a fee if you pay off the loan early. If classic cars appreciate as expected, you may want to sell or refinance within 3 years. A prepayment penalty quietly eats into that profit. 3 red flags. Walk away if you see any of these. 1. A lender who doesn't require or understand agreed value. They don't know this market. 2. Any loan with an interest rate above 18% framed as a classic car loan. That's a predatory personal loan with a different label. 3. A seller pushing you toward their preferred lender before you've agreed on price. Classic dealer move. Separate those two conversations every time. If this video saved you from a bad loan decision or helped you get into the right classic car, hit the like button. It tells the algorithm this content is worth sharing. Drop your question in the comments. What car are you trying to finance? I read every single one. Subscribe if you haven't already. Next week, how to negotiate the price of a classic car like a professional, even if it's your first time. See you then.